Here is just a look at the coming out of the recession, what Delta Trust's performance has looked like. The company did really well in the 08, 09, 10 environment, stayed profitable during that period, built capital, added to loan loss reserves. And again, my hat's off to Chris Roberts and Carol Pennick for their overall leadership in the bank and making sure that that happened in our board of directors. But you can see our total asset growth here where we ended the year at $388 million in bank assets. In brokerage, we were at $464 million in client assets in the broker-dealer company and another $100 million held away at various investments. In trust, they ended the year at $533 million in client assets in trust. That business continues to grow well around the country. We have trust now in over 35 states. People we're helping do their estate and trust planning and investment administration. And our deposits over the last 5 years have grown in all 50 states. We have a robust deposit business on the internet nationwide here at Delta Trust. And so net income ended the year at $3.6 million. So through the period of the recession, it's continued to grow. I can't say Ben Bernanke and the Fed policies helping much on that subject, but nonetheless, my hat's off to the employees at Delta Trust and all of our clients and friends for their support. As sort of a tip of the hat today to the presentations that we've got coming up with Charles and Bob, I wanted to do a little grab bag of economic indicators that we follow at Delta Trust that just is food for thought. I'm not going to spend a lot of time on them. I'm not going to give you a talk, but I think it will put some of Charles's comments in perspective and Bob's. First of all, you know, the red line there is the coincident indicators. That is the economy as it is today. It still is upward sloping, which means it's continuing to mule forward towards economic growth. The blue line, the sharply upward V-shaped blue line, is the leading economic indicators, still pointing upward. But you can see the two dips there in mid-10 and in mid-11 where the cable news shows forecast an immediate recession, a double-dip recession. And they were disappointed both in May of 10 and May of 11. So at this stage, the economy continues to expand. Here you see that graphically in the quarter-to-quarter GDP growth with 2011 ending on a very high note in the fourth quarter. Most economists are thinking that it will not expand at that rate as we go into the new year, but that's a great question for a guy like Bob Turner who looks at all the inputs and outputs of American economy going across the country on rail is a good indicator. C&I lending, commercial and industrial loans at banks are expanding and have continued to expand all during 2011. One reason why a lot of us around Delta Trust are not keen on QE3, not keen on expanding the money supply anymore, because when you have robust money supply growth like we've had at the Fed and you combine it with an expanding bank balance sheet in private lending, that does produce, can get interest rates out ahead of themselves and can produce a little mini interest rate disaster for people. Here's bank credit at all commercial banks. This would include the securities they buy as well. And again, it's fit and started, but been solidly in positive territory during 11. Four-week moving average of initial claims falling. Charles is going to reference this, so I'm not going to go into it, but it's headed in the right direction in a very fitful manner, but nonetheless a manner that it's done in the past. Retail and food sales, percentage change from a year ago. When it rebounded strong and has stayed strong despite personal incomes being under pressure in real terms. Some energy trends that we're monitoring as it relates to our investment portfolios that we find interesting. I love this one. It's my favorite. I'm not making a political comment, but this is the nation's pipeline system please find for me the Keystone Pipeline and why it is such an enormous big deal politically. I don't think building one more pipeline is going to tip the earth off its axis. But anyway, this is the natural gas and other pipeline system throughout Canada and the continental U.S. And it's just food for thought. I'll just leave it at that. I understand there's some in the room. I'm looking for my old friend Don is here, but nonetheless, there you are. We'll talk later. Also, another choke point for energy prices is the Straits of Hormuz, 34 miles wide, has a 6-mile ship channel in the middle of it. It's extraordinarily difficult to navigate even under the best of circumstances. If you read the press closely, you'll find ships bumping into each other there periodically during the year with no armed intervention involved. I guess the reason for me putting this up there, it is affecting oil and gas prices today. In my judgment, that pricing is now priced into the wholesale price of fuel. And we've had Iran attempt to close the straits before. Some of you may remember that in 1977 and 1978. It was not particularly successful. They failed to understand that right now we have 4 carrier groups in either the Gulf or off the coast of India right now. They're in the process of changing, and my invitation would be here, don't bet against 2 things. One, the U.S. Navy, and secondly, about 85% of the Gulf's production can now go overland by pipe and can skirt having to be transported by ship. And of course, the major importers of this are China, Japan, primary users in Asia as opposed to users in North America. Another energy trend that Bobby Brown mentioned a few minutes ago, which is on my radar screen for this year, this is the gas divergence between the price of oil and the price of natural gas. And you see the green box down there at the bottom that it is not following its role. That's the North American continent adjusting to the impact of shale gas. And so, you know, where would the next move be in a commodity like this? Sort of my instinct is it would be up in a macro, longer-term point of view, sort of like the trend we see in interest rates, which I'm going to talk about in a minute. Charles is going to address the ag sector with an extraordinary presentation in a few minutes. I just want to tee it up by saying that there is an increase in protein consumption around the world. He's going to get into it in detail. Here you see the U.S., Brazil, Russia, China, and India, primarily a vegetarian country, as you see. But nonetheless, beef, pork, and poultry consumption in those emerging countries is growing, and it's certainly part of the macro trend. Likewise, refrigeration at the consumer level is growing in those countries as well. It's hard to have beef as a big part, or poultry or pork as a part of your diet and not have refrigeration. So another macro trend in the emerging world. In the government market, a couple of comments. One, this is one of my new favorite indicators out there. This is the Policy Uncertainty Index. And it has exploded since the market troubles in September 2008. The lack of the market's understanding and what direction government policy is going to take has really built in a much bigger risk premium in business and business activities, from capital investment to hiring. And you see this with some of the peaking at the debt ceiling debate last August, which just went over the top with its goofy rhetoric on both sides. But this is a risk to our economic recovery, policy uncertainty. Likewise, the media is filled with talk about what the proper tax rate is in our country. And I think while lower taxes are generally better than higher taxes, certainly at the margin, people never talk about the strangulation of our U.S. economy from regulation. It's just over the top, again, ridiculous in its component parts, and everybody here is paying a cost for that, a cost that, in my judgment, exceeds all the corporate and personal income tax collections in the country. Here is Federal Register pages since the Eisenhower administration. And this, I picked the date of the last day in office for each of these presidents. And you can see it's just been since President Reagan cut it dramatically from the Carter administration, and then it's just been slowly creeping back up again. And now could easily, in 12, I think, break through 100,000 pages published in the Federal Register of new government regulations. And as you know, this is not necessarily negative. They publish good things and bad things. This is total pages. I'm not making an editorial comment about are some of those good for the economy, because all things are published in the Register, but the cost of the regulatory process is something to think about as you think about barriers to a robust economic recovery. This, like my natural gas chart, this is long-term interest rates since 1790. I think, BR, you remember what Alexander Hamilton told you about that, don't you? Yeah, yeah, yeah. These are very long cycles, and one, you know, this is beginning to feel after 40 years that we are reaching that bottom point, like how much lower could interest rates go? And so again, are we sometime in the next few years going to experience, either because of federal deficit finance problems or just long-term market trends, start to see interest rates for government finance go in a different direction than down? And again, I would urge you to consider the possibility that is higher rather than lower. And on that subject, here's the public debt as a percentage of GDP. You've got the pigs on the left, Portugal, Italy, Ireland, Greece, and Spain, all of which you read about ad infinitum in the newspaper. You can see that Spain feels a little picked on at only 52% compared to some of its colleagues. The G5, the US, France, Germany, the UK, and Japan, with Japan being the far highest and obviously under a lot of stress in their fiscal affairs in Japan. And then the countries that I think have flexibility that merit interesting opportunities as you consider investments: Australia, Korea, the Netherlands, Canada, Mexico, and Brazil, all have what I call as flexibility. They're all well below any economist's consideration of trouble in their public finance as it relates to their cash flow statement and their long-term government bond obligations. They may have other challenges, but this one is in relative good shape now, and so I refer to them as having flexibility. Some interesting grab bag issues and demographic trends that we're following. One is this thing that you do read a little bit about, but it's the correlation of the unemployment rate to the education level. You know, we talk about the extraordinarily high unemployment rate, but we don't often put it in perspective. Well, who's unemployed? And although not to say it would be a surprise that people with less education are more unemployed, which is what this shows, but that is going to be a structural challenge for our economy. Again, I think Charles will address this. And a slide I call What's Happened to Our Boys. I've just finished reading 3 really interesting books about what's happened to raising young men in our society. This is cutting across all demographics. It's not in any way connected to race, creed, or color. Men are no longer getting up and going to work in the morning, and they're no longer graduating from college. And it's just a fact. And it's getting worse. And it is, again, as I say, across all ethnic backgrounds. And I don't know what we do about it, but it's an issue that you can't think about it until you hit people in the face with it and start asking the question, well, why? And what role does family play in that? What role does the military play in that? Or the scouting movement, or sports, or a great coach, or whatever. But this is an issue, and it's an issue as a society we need to think about. So those are kind of a grab bag of some things that we're thinking about as we look at risk to the economy in 2012. I think generally we're all pretty cautiously bullish about how this year is going to progress. I mean, when you look at where corporate profits are and what's going on, but as I point out, there are a lot of risks to that outlook.